Welcome back to Investing Talk Podcast.
Today we're looking at Xpeng, ticker XPEV. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave in the comments below.
So let's get into the analysis. Overall, our sources are giving Xpeng a pretty strongly bullish outlook. It lands an 8.5 out of 10 rating.
An 8.5, okay.
Yeah, and this confidence, it's not really based on, old news or legacy stuff. It seems rooted in their financial momentum right now.
And you can really see that momentum on the top line, can't you? I mean, their trailing 12-month revenue, the TTM figure, it hit $8.42 billion.
Yeah.
That's as of June 30, 2025.
Exactly. Huge number.
That kind of figure, it really reflects strong demand, doesn't it? Successful product launches making an impact.
Definitely. And, that performance is why the analyst consensus is holding firm at buy.
Right.
The 12-month price target range they're looking at is pretty wide, actually. $22.51 on the low end, stretching up to $31.
$31, okay.
But, for a growth company like this, especially fighting in a price war, the really critical thing isn't just revenue, it's financial resilience. Can they fund the fight?
And on that front, Xpeng seems exceptionally well-positioned from what I'm seeing. Their balance sheet, they're sitting on over $4 billion in cash equivalents.
$4 billion?
Yeah, that figure, as of mid-2025, that represents a serious war chest.
A war chest is exactly the right term. In a market as hyper-competitive as, new energy vehicles in China, that kind of liquidity, it's absolutely vital. It means they can keep funding aggressive R&D, which is key for them. And crucially, sustain their expansion plans without constantly worrying about raising more capital right away, even if the market gets a bit shaky.
And that cash isn't being wiped out by, crippling debt either, which is another important piece. Their total debt level looks moderate compared to those cash reserves.
Right. It's manageable.
Plus, while it's maybe still early days, we are seeing sequential improvement in their free cash flow. It's moving in the right direction.
Yeah, there are signs.
Which suggests, as they scale up operationally, they're building future options, maybe for investor returns down the line, buybacks, or eventually dividends. Give that bullish case some real backbone.
But okay, we absolutely have to pivot here. Let's talk about the elephant in the room. Profitability.
Yeah, the big negative number.
Exactly. While that growth is explosive, net income is still deep in the red. They reported a loss of almost $600 million, TTM.
Whoa. Okay, nearly $600 million loss.
Yeah. That's the fundamental immediate weakness investors really have to grapple with.
Okay, so that loss is massive. How are analysts justifying a buy rating when the company's bleeding cash like that? Is this like a sign of some deep structural problem, or is it really, as some say, a deliberate strategic choice?
It seems to be largely the latter. Xpeng is intentionally running a high burn rate. That's the term, right?
Right.
They're prioritizing grabbing market share, which means aggressive pricing, and they're pouring money into R&D, specifically into autonomous driving tech. They want to win that technology race.
So short-term profits are just secondary.
Pretty much. Secondary to achieving that tech superiority and hopefully a dominant market position later on.
That's a high-stakes bet, though.
E.
The critical risk here, then, is that negative free cash flow means the company basically operates with zero margin for error, doesn't it?
Absolutely.
They have to keep delivering strong sales growth quarter after quarter just to keep investors believing in that long-term tech vision.
Exactly right. A single slip-up, maybe a product launch delay or an R&D milestone missed.
Right.
That could trigger a really rapid repricing of the stock. Investor confidence is key here.
Okay.
Now, to be fair, they are showing some signs of operational maturity. Gross margins are improving sequentially.
Okay. Why?
Well, it seems to be a direct result of achieving scale, finally getting some economies there. But also, they've apparently had success with cost-cutting and smarter supply chain management. They're learning to build these complex cars more efficiently.
But those margin improvements are always under threat, aren't they? The Chinese EV market is just notorious for intense competition, those brutal price wars.
Constant pressure.
Even if Xpeng gets super efficient internally, that sector-wide price pressure could easily just flatten out any gains or even reverse them. They could end up running just to stand still on margins.
That tension really forces the question, doesn't it? If they can't really make money now, what makes Xpeng unique enough to survive and eventually thrive? What's their sustainable competitive advantage? Their moat?
And this is where the tech story really takes center stage, I think. Our sources consistently peg Xpeng as a top-tier EV innovator in China. That innovation is their moat. They're not just selling metal boxes on wheels, they're selling a technology ecosystem.
Right, and that ecosystem is supported by a pretty compelling product lineup now. You've got the high-volume G6 SUV, the P7 sedan.
Popular models.
Yeah, and also their recent push into the more accessible end of the market with the M0 and M03 hatchback. That just launched in Q2, Q3 of 2025, so they're diversifying strategically.
But let's zoom in on what really sets them apart from some peers. It's the underlying architecture, isn't it? That SEPA 2.0 EV platform.
Yes, that's fundamental.
Think of it like the foundation,
Right.
right? It's designed purely for electric vehicles from the ground up, built for scalability. That lets them roll out different types of vehicles pretty quickly, standardizing components.
Yeah.
Which should drive down costs and complexity over time.
And if SEPA 2.0 is kind of the hardware foundation, then their own smart operating system, XOS Tianji, that's the intelligence layer.
Crucial.
Yeah, it controls the whole user experience. Infotainment, but more importantly, their advanced driver assistance systems, the ADS. While some competitors are still trying to adapt old internal combustion engine platforms, Xpeng is all in on software-defined vehicles.
And that software focus means they can push out rapid updates over the air, right?
Yeah.
Improving safety, adding new features long after you've bought the car.
Exactly. That level of integration and continuous improvement, that's the edge over maybe some legacy players who are slower to adapt to how software-centric modern EVs really are.
So the tech focus seems to be translating into actual market validation.
Yeah.
You mentioned they're consistently ranked, top 5 among Chinese NEV companies by monthly sales.
That's right. The market is demonstrably responding well to their products, the quality, the features.
And the sentiment seems to back that up too. We're seeing reports of strong brand loyalty, robust delivery growth. Analysts have already had to raise their forecast for the full year 2025 because the new models are pulling in customers.
Yeah, the traction is there. Okay, let's switch gears completely now. Let's look at the technical picture, which honestly paints a really powerful portrait of investor sentiment right now.
How so?
Well, XPEV has had just fantastic price performance this year. It's outperformed 93% of comparable stocks year to date.
93%. Wow, that's huge outperformance.
It really is. And you see it reflected in the chart patterns, too. The stock's showing a classic kind of entrenched bullish trend, that consistent pattern of higher highs and higher lows.
Which signals strong conviction from buyers, right? People accumulating shares.
Exactly. And the technical analysis tools confirm this momentum. ChartMill, for instance, gives XPEV a perfect technical rating. 10 out of 10.
A perfect 10.
Yeah. That's not just a passing grade. That indicates the primary trend direction is just unambiguously bullish at this moment.
So for investors watching the charts, that bullish signal is reinforced by where it's trading relative to key averages, like the moving averages.
Precisely. The stock is currently trading comfortably above both its 50-day and its 200-day moving averages.
Okay, so that confirms the bullish momentum across both medium and longer-term timeframes.
Yeah, it's a solid confirmation. And if you're looking at specific trading levels, the sort of 3-month bullish range seems to sit between roughly $21.50 on the support side and $31.83 on the resistance side.
$31.83. That's the key level to watch on the upside then.
That's the key resistance. A successful, sustained break above that price point could potentially signal the next significant leg up for the stock.
And what about the underlying momentum indicators? RSI, WAGD?
Also supportive. The Relative Strength Index, the RSI, is sitting around 57. That's sort of neutral, maybe modestly bullish. Importantly, it indicates the stock isn't wildly overheated yet.
Room to run potential.
Potentially. And the MACD indicator is positive, confirming that ongoing buying interest. Plus, we've noted steady institutional inflow since July 2025 suggests the bigger funds are getting positioned.
Ah, the institutional money moving in. That's often ahead of anticipated news or catalysts, right?
Exactly. And those catalysts are what we really need to focus on next. The specific dates, the events that could drive volatility in the near term, like the next 0 to 3 months.
Yeah. What should we be watching?
First major event coming up is November 5th, 2025. Xpeng is holding its 2025 AI Day in Guangzhou.
AI Day. Given their tech focus, that sounds pretty important.
Critical, I'd say. It's expected to highlight their progress in autonomous driving, smart EV tech, their secret sauce, really. If they announce a significant leap forward in their driver assistance systems, that could directly fuel investor enthusiasm.
Makes sense.
Oh.
What's next after AI Day?
The second big one, and often the most volatile, is the Q3 earnings report. That's expected mid-November 2025.
Earnings season. Always moves the needle.
Definitely. And expectations are high here. Analysts are looking for strong year-over-year growth in both revenue and deliveries, validating those recent product launches like the MO&A.
So a beat there could be a major trigger.
A major upside trigger, yes. Reinforces the whole aggressive growth story.
Okay. And then looking towards the end of the year and into early next.
Yeah, towards year-end, you watch institutional activity. December often brings ETF rebalancing index funds adjusting their holdings.
Which can create buying or selling pressure.
Exactly. And then late January 2026, we'll see the release of the 13F filings.
Right. The 13Fs show what the big funds, the smart money, bought and sold in the previous quarter.
Yeah.
Gives you a peek into their positioning.
Can offer some critical insights, yeah. Now, beyond those confirmed dates, there's also quite a bit of speculative buzz floating around that could add some fuel.
Oh, like what kind of rumors?
Well, there's frequent, though unconfirmed, chatter about a potential expansion of their partnership with Volkswagen.
Wow, okay. Expanding the VW partnership. That'd be huge, wouldn't it?
Transformative, potentially.
Mm.
A deeper relationship with a global giant like VW gives instant validation, scale, maybe an easier path through complex international regulations, big credibility boost outside China.
Definitely something to watch, even if it's just rumor for now. Anything else?
There's also some talk about a faster-than-expected entry into the Southeast Asian market, which is seen as a high-growth region for EVs.
Interesting.
And longer term, keep an eye on early 2026. There's potential buzz about the launch of a mass-market sub-brand.
A sub-brand. To go after a different price point.
Exactly. Could dramatically expand Xpeng's total addressable market beyond their current sort of mid to high-end focus.
And finally, I guess just general globalization news remains a potential catalyst, right?
Mm-hmm.
Any official announcements about the European sales rollout or new regulatory approvals anywhere internationally?
Yeah, those could serve as quick, positive news triggers, especially highlighting Xpeng's tech focus compared to maybe some local rivals in new markets.
Okay, so summing up, we've got near-perfect technical ratings on the chart.
Yeah, a 10 out of 10.
A substantial cash war chest over $4 billion.
Mm-hmm.
Clear technological differentiation with SEPA 2.0 and XOS Tianqi.
Right, the tech moat.
All set against that fundamental tension. Ongoing losses, negative net income, and really fierce competition, especially on price.
That's the picture. So the investment thesis here seems strongly bullish overall, but the time frame really matters for an investor.
How so?
Well, for someone maybe seeking higher risk, higher reward plays, Xpeng looks attractive for opportunistic short-term trading around those specific catalysts. We mentioned the AI day, the Q3 results, potential for quick moves.
Right, playing the catalyst.
But for those with a longer horizon, maybe looking out a few years, it also seems suitable as a vehicle to potentially capture the full story. The revenue scaling, that hoped-for margin improvement, and the global market expansion they're clearly pursuing.
So it really depends on your investment style and time frame.
It does. Which brings us right back to that core tension, the critical question you really need to watch over the next, say, 2 quarters.
Which is?
Can Xpeng actually translate its impressive tech, that 1010 technical rating, and its strong $4 billion cash position into sustained positive operating cash flow before those competitive pressures completely flatten out its margin recovery?
Right. Can the finances catch up to the tech story before the market reality bites too hard?
Exactly. The answer to that question is what likely determines whether this is a buy mainly for speculation around news or if it's a solid buy for the long run. That's the core puzzle for investors right now.